That's true investing, and that's true wealth creation. What's up, everyone? Kevin Amolsch, Pine Financial Group, where we work together so you succeed. Hey, you found us here on Facebook, maybe you found us here on YouTube. Please help us out. We're trying to help more real estate investors just like you. You could do that by hitting like, hitting subscribe. Curious what you think about this video, so leave me some comments below. I'm just getting done with a phone call with a client, and a topic came up that's been coming up a lot recently, and that's what should the exit strategy be when buying single family homes, especially in the markets that we typically work in. And the reason I'm saying that is because the market is so tight right now. We're not seeing a lot of transactions. I know there's no recession technically going on right now, but if you ask anybody in real estate, they are definitely feeling it. We're not seeing just a lot of volume. So inventory is super low. Inventory remains at crisis level lows, but there's not a lot of demand either. So we're not seeing a lot of people buying houses. So the exit strategy being either flip the purchases, so you buy them, fix them up and sell them, or buying, fix them up, and then renting them out and keeping them for long term. So what's better, to rent or to flip? That is the question, and that's the topic of the conversation that I just had on the phone. So I thought I would share what we were talking about with you all. So hopefully you get some value. Now, we know the market is tight, and that makes it hard to be successful. And the reason I say that is because there's not a big gap between retail values, like your nice, pretty turnkey homes, and wholesale values, your fixer-uppers, your foreclosures. That would be what I would consider a wholesale type of transaction. So to be successful as a real estate investor, typically what you want to see is a pretty big gap between the wholesale prices and the retail prices. Buy low, sell high, obvious, right? Even if you're going to rent it, you want to buy low and have some instant equity, instant value. So that's the strategy. And when you have tight inventory like we have right now, what you find is retail buyers, people that will want to buy a property to move their family into, will consider wholesale houses because there's not a lot of retail to buy. When there's limited inventory, there's limited choices. So if they're not finding the house that they want, maybe it's a neighborhood they want that's a nice fixed up home, then they'll settle for the house that needs a little bit of love, a little bit of work. They'll go ahead and settle for that. And that's going to drive values up on the wholesale side, right? So that squeezes the margin. The wholesale prices come up. Retail prices might come up a little bit, but they're held down by appraisers and appraisals. There's only so much appreciation you could see because of the appraisals and using comparable sales. So you just see a squeeze market. And that's sort of what we're seeing right now, making it difficult. But that doesn't mean it doesn't work. So the case for flipping properties, if you're out there looking for fixer-upper properties to buy, maybe you want to fix and flip. Here's some reasons why. They're obvious, right? You want to have a profit. You want cash flow. It's instant profit, instant paydays, and it's large chunks of cash coming in all at one time. So you might flip a house and make 30, 40, 50, whatever it is, $1,000, and it's all right now. But then the house is gone, right? You don't have that reoccurring income. It's a lot of cash, and it's all right now. So that's good. If you're worried about the market going down, like some people have concerns with, I'm less concerned because inventory levels are so low. But if you're concerned with the values going down, then flipping might be a better approach because you're getting in and out of the project quickly. You're not holding on to it and riding the wave down. So that could be super beneficial, right? You limit your market risk if you're in a project for a short period of time. So those are two of the big reasons that flipping is still effective even in today's market. Big paydays, cash is king. I say it all the time. You could have a profitable business and go out of business. You really want your cash flow. Cash flow is what makes business sustainable and makes your investing sustainable. So big chunks of cash coming in, great, positive, right? We all want that. And then two, limited market exposure. So you limit your risk to a downside. Now, rentals, the benefit of going ahead and fixing up a fixer-upper and keeping it as a rental is wealth. When you sell your flip, as I mentioned, the investment's done. You don't have it anymore. That's why I often say fixing and flipping is a high-paying job. It's not a real estate investment. True investing is passive income. So if you have rental properties that you're renting out and it's coming in every month and you're getting your appreciation, so it's going up in value over time, that's true investing and that's true wealth creation. So the 4 ways you get wealthy in real estate, we probably all know these already, so I'll be very brief here, but your cash flow from your rents, your house going up in value. Number 3 would be the tenant paying off the mortgage for you. So over time, you're reducing your debt. So that's actually is profit, even though it's not coming into your pocket. That's creating profit and wealth. And then 4 is all the tax advantages to owning rental properties. So there's really 4 profit centers with holding rental property. There's 1 profit center with the fix and flip, and that's selling it for your profit, right? So there's a case for rental properties. I love both. I love fixing and flipping, and I love creating wealth with rentals, and I've made money in both. So I would say, what is the strategy for you if you're out there buying fixer-upper houses? It could be flipping or it could be rent. It depends on what your goals are. And I know it sounds so cliche. The answer is it depends, but it truly does. Are you worried about the market going down? Then maybe fixing and flipping is better. Do you need some cash flow? Fixing and flipping is better. Are you okay without the high amount of cash coming into you and you want to hold on and create wealth for you and your family and your legacy? Then rental properties are going to be better. You will create wealth with rentals, 100% guarantee it. You just have to be in the project, in the properties long enough to realize that wealth. Okay. So I hear it all the time. There's risk in real estate, and there is risk in real estate. But if you've got a long horizon, 10, 15, 20 years or more, you could choose when you want to sell the house or not sell it at all, and that will create the wealth. Obviously, you want positive cash flow. If it's taking money out of your pocket every month, that's risk, right? So we want to buy properties that we could fix up and rent out and have a positive cash flow. And as long as you're doing that, wealth creation in rentals. So I want to close with this. It depends on what your goals are, but if you're going into a project and you want to flip it and it ends up not selling for what you hope for, maybe it's a good idea to choose properties that you could rent if you want to. So it is a good idea to have a plan B. Maybe you're fix and flip, you want the large cash in now, but if it doesn't sell, then I'll rent it out. So a plan B. So then you would be targeting neighborhoods that make good rentals, even if your exit strategy is to flip. Now, with that said, if you target those specific neighborhoods, you could be reducing your upside or your profit on your fix and flip, but it's staying safe, right? Staying safe. If it doesn't sell, you could rent it. So that's just an additional insurance policy, if you will, for your fix and flip. But look, you could also do both. You could buy one, flip it, create some cash flow, buy another one, keep that one as a rental, go ahead and flip 1 or 2, buy your third one, do another rental, and every third or fourth or second or whatever the cadence is that you want, just keep it. So always be flipping for your income and then invest that income into long-term wealth creation. So I see a lot of successful investors use that strategy. It's a hybrid: flip, 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 rent, flip, 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 rent, flip, rent, whatever the cadence is, and do it over and over and over. So you're collecting assets. That's what I would recommend doing if you really are trying to create wealth in real estate. But look, I've flipped properties and made a ton of money. I love it. I've held rentals. I hold a lot of rentals now. I make a lot of money doing that as well. Both are great. The bottom line is, if you find a deal that's a good deal and there's spread, I would buy it. And then obviously you do want your exit strategy in mind, but buy the good deals and you will do just fine. So let me know what you think. What are you seeing in your business, in your neighborhoods, in your markets? Is flipping working better? Are rentals working better? Are investors choosing one or the other based on market conditions? I'm would be curious to know what you think. So let me know, leave some comments below. If you get any value from these videos, or if there's anything we could do to help you. We're hard money lenders. We raise private capital from passive real estate investors into our debt fund. We loan that money out to fix and flip investors or buy and hold investors. If we could help you in any way, I would love to be on your team and be part of your success. So let us know. You can find out more information about us and what we're doing at pinefinancialgroup.com. Again, that's pinefinancialgroup.com.